Hi guys, today I'm going to be doing task 13.3 with you in your textbook. You will then try 13.2 for homework. And please look at the detailed illustrative example as long as formats which you need to learn from your textbook. So you'll find all of this from page 508 right up until 530. Okay, then task 13.2 you're going to do for homework, which is due on Monday, and we're going to do task 13.3 now. Okay, so task 13.3, it's Mabula manufacturers between the production cost statement, the income statement, as well as the notes. Okay, so these are all new formats that you're going to need to learn because you're definitely going to get this in exams. Okay, they are not difficult, so please make sure that you do learn them. Okay, so Mabula manufacturers produces cricket bats that they then sell to various sports retailers at a markup of 50%. Their financial year ends on the 28th of February each year. So we're going to be doing the production cost statement, the income statement, and all the relevant notes in order to show the workings. So we're actually going to start with 13.3.3 first. That means we're going to be doing the notes first. So this is how you have the notes in your workbook. Okay, just go through and see there are 6 notes. Now you don't often, always in exams, you don't have to do all of these notes. Most of the time you can just do these notes in the form of a calculation, but you obviously need to know how to do the calculations and how to which items need to go into each calculation. Okay, so we start off with the information on 1st of March. So that's 1st of March is the beginning of the year. Those are our opening balances. The first thing we have is the raw materials stock account. Okay, now please remember that direct materials and raw materials, so that it can either be called direct materials or raw materials. Those words are interchangeable. You can use any one you like as long as you know that they mean the same thing. Okay, so the balance is 180,000 on the 1st of March. So that will be our opening stock, 180,000, and you can just put it in there. Okay, then the next thing we have is the work in progress stock account. Now, the work in progress stock account goes to the production cost statement. So go to 13.3.1. This is the production cost statement. Okay, now in the production cost statement, these details have been filled in for you in your workbook, and these are the other details that you are going to need, so you can fill them in. Okay, so we have direct material or raw material costs, direct labor and direct labor costs. Now, do you see that there's a block around these two figures, and together direct material plus direct labor costs will give you prime costs. Okay, then we're going to put our manufacturing overheads, also known as factory overheads. Okay, and do you see here I have these note numbers. So the answer from this is going to come from note 1, direct labor costs from note 2, and the factory overheads from note 3. Now together, the direct material cost, the direct labor costs are called the prime cost. Then the prime cost together with the factory overheads we call total manufacturing costs. Okay. Then we add the work in progress at the beginning of the year. Now again, these words are interchangeable. Sometimes they call it work in progress and sometimes it's called work in process. It doesn't matter, it's the same thing. So this is the figure that's been given to us here on 1st of March 20.7, so 80,000, which is going to put it in here. I've written type in add here. You don't have to write add as long as you know that you're going to be adding it. In the next line, you don't have to write anything there. And then we're going to say less work in progress or process at the end of the year. And because we'll be subtracting this, it's going to be in brackets. You must remember that later. And the final answer will give us the cost of production of finished goods. Okay, so you can just fill in this format quickly. Okay, and we put the 80,000 in. We're going back to the question. We then have in the third bullet, the finished goods stock account of 70,000. Okay, so we're going to go to, I want you guys to go to note 6. Okay, now in note 6, we have the opening stock of finished goods. This has been given to you in your workbook, the details, okay, but obviously you're going to have to learn it as well. And we're going to put the 70,000 in there. Now, what I want you guys to remember about this opening stock of finished goods, These were the goods which were produced at the end of last year but were not sold. So they become opening stock, right? Now, if we look at the work in progress which we put in here, these were the goods that were left unfinished at the end of the year and will now be finished during the current year. And then if we look at these were the raw materials that we bought last year but we didn't use. So this is the opening stock of raw materials. So in the manufacturing enterprises, we have three types of stock. Okay, the one is the direct or the raw materials. Okay, the other one is the work in progress, and the last one is finished goods. So in the trading enterprise, all we have is trading stock. But in a manufacturing enterprise, these are the three different types of stock. So we have three types of stock. That means we have opening balances for them and we have closing balances for them, most of the questions. Okay, okay, then the next we have is consumable stores on hand. Now, consumable stores in the manufacturing enterprise is regarded as indirect material. So I'd like you to go to note 3, which is the factory overheads, and you can write the indirect material or consumable stores. Those words are used interchangeably. You don't have to write both. You just write one. And I want you to open up a bracket, and we're going to put this amount of 14,000 into the bracket. Okay, then after that we have factory equipment and accumulated depreciation on factory equipment. We're not doing a balance sheet, so we'll just use this information later on, maybe if we need to work out depreciation or something like that. Okay, now we're going to go through the transactions and record it in the relevant places. Okay, so number 1, raw materials amounting to 600,000 were bought on credit. Okay, so I want you to go to your raw materials cost account. Now there's some details that are missing here, so let's fill them in. Opening stock was given to you. To that we add purchases or net purchases. Now remember why I say net purchases. Net purchases means purchases minus returns. Then you're just going to put this amount, open up bracket and put 600,000 in there. Then number 2, raw materials amounting to 460,000 were bought for cash. It's also going to form part of purchases. So we're going to go to the purchases and add on 460,000. Okay, then carriage on raw materials amounted to 150,000 incurred on credit. Okay, now carriage on purchases also comes with the direct or raw materials cost note. We have carriage on purchases. I don't think there are any other adjustments, so we can just put the figure in 150,000. Now, if the question here is anything like import duties or whatever, you also list it here and bring the figures in. Then in number 4, raw materials of the factory amounting to 24,000 were returned to the creditors. So we're going to subtract that from our net purchases. We're going to subtract 24,000. Okay, and then we're done with the calculation. So you can work out the answer and put it in. Okay, now if you see your workbook, there is a line here, so you can just work out your answer, put that in, okay? And we'll come back to this later. Okay, then number 5, consumable stores for the factory bought for cash amounted to 44,000. Now remember the consumable stores on hand at the beginning of the year, we put it into the factory overhead. So this is 14,000 which they had at the beginning of the year, and they have now purchased an additional 44,000, so we're going to add it on, right? So basically our calculation, and I just want you to make a note about here, it's opening stock plus purchases, okay, minus closing stock, and minus returns if you had them, right? So this is the calculation, right? This is the calculation we do for a lot of things, so you must keep that in mind. So far we've got opening stock plus purchases. If there are no returns, we won't worry about it. And we must remember we'll subtract closing stock of consumable stores from here as well. Okay, then number 6, salaries and wages paid amounted to 360,000. 180,000, this was for direct labor. Let's stop reading. Okay, so go to note 2 for direct labor cost, and you're just going to put in the direct labor amount here, 180,000. Okay, so there you go, 180,000. This question doesn't have anything like a lot of the questions will have a calculation you need to do or contributions you need to add. This question doesn't have anything like that, so we just put 180,000 in. Okay, then it says 80,000 was administration expenses. So I want you to go to the note, which is called administration expenses. You can write salaries and wages, and you can put the amount in there. Okay. Okay, so for salaries and wages here, we're going to have 80,000. Okay, and it says, and 80,000 was administration expenses, and the balance was indirect labor costs. Okay, now indirect laborers are those workers who work in the factory but who are not responsible for making the products. So indirect labor is always part of factory overheads, and I'm sure you remember this from last year. So when you have to do a note for factory overheads, one of the first two things you must always put in there will be the indirect material or consumable stores and the indirect labor, because all the questions are going to have it, right? So it says that the rest, so we're just going to take our calculation, will be 360,000 minus 180,000, which is direct labor, and minus 80,000, which is administration costs. And that will give us an answer of 100,000. Okay, then depreciation on factory equipment must be written off at 12% per annum on diminishing balance. Okay, now because it's depreciation on the actual factory equipment, we're going to put it here under factory overhead costs. Then we have to calculate it on the diminishing balance. So if you look at the cost of equipment given to you in the first part of the information, it's 1 million. We're going to subtract 240,000 and multiply the answer by 12% to give us 91,200 for depreciation. Then number 8, depreciation amounts to 2,500 on office equipment. Now any costs relating to the office will go to the administration costs. So go to your administration costs, and we're going to put in 2,500 for depreciation. And 11,000 on the sales vehicle. Now the sales vehicle will go to the selling and distribution costs. Okay, so we're going to go to the selling and distribution. We're going to put this amount in for depreciation, 11,000. Okay, then number 9. So basically what I want before we do this, before selling and distribution costs and administration costs, right? Administration costs are all the costs involved in the office of the factory. And the selling and distribution is everything that happens with regard to sales. So these costs have to be classified separately. Okay, factory overheads deals with all the costs in the factory. Then all the costs of the office go to administration costs, and all of the costs of the selling department go to selling and distribution cost. Okay, look at number 9. Rent amounting to 500,000 was paid during the year. The factory uses 60% of the floor space, while the office uses 15% and the sales department the rest. Okay, so this rent we need to allocate it. Okay, so we have rent expense. Okay, the amount is 500,000, but the factory uses 60%. So we're going to take 500,000 and multiply it by 60% to get our answer of 300,000. Then it says that the office uses 15%. So we're going to go to the administration cost for rent expense. Okay, and we're going to calculate 500,000 times 15%. Okay, and just work out the answer in there. Okay, and it says that the Sales department occupies the rest. Okay, so the total percentage is 100%. The factory uses 60% and the office uses 15%. So you're just going to subtract it. 100 minus 60 minus 15. Okay, which is I think 25%, right? Okay, so we're going to go for to rent expense. Okay, we're going to take our 500,000. Okay, and we're going to multiply it by 25%. Okay, so 500,000 times 25%. For rent expense, we're going to put the answer in. So 125,000. Okay, then number 10, other expenses were electricity, 344,000. The factory used 320,000. So go to factory overheads, open up electricity, and we're only going to put the factory's portion in there, so 320,000. The office used 10,000, so we're going to go to administration costs, and we're just going to fill in there 10,000. And the sales department used the rest. Okay, so we're going to go to electricity, and our calculation will be 344,000 minus 320,000, which went to factory overheads, and minus 10,000, which went to administration costs. And you're just going to work out your answer. 14,000. Then the next bullet in number 10, sales vehicle running costs was 72,000. Okay, so we go to our motor vehicle expense, or whatever you could call it, whatever you need it to. We're just going to put the amount in directly here, 72,000. Then sundry expenses were 90,000. Okay, but these are split in the ratio 4:1:1 between the factory, the office, and the sales department respectively. Okay, so remember we have the factory, we've got the office, and we've got the sales, right? And the ratio is 4:1:1. Okay, so we can add up all of these, so that will give us 4 plus 1 plus 1, which is 6. Okay, so the factory is going to get 4/6. The office will get 1/6, and the sales department will get 1/6. Okay, so the amount is 90,000, and that's the way it needs to be split. This is sundry expenses. Okay, I'm going to go to the factory overhead first. Okay, so I'm going to open up sundry expenses here. Then my calculations will be 90,000 times 4/6. Okay, and that will give you an answer of 60,000. Then we'll go to the selling and distribution. Okay, sundry expenses. Okay, our calculation will be now 90,000 times 1/6. Okay, which is 15,000. And remember that office gets the same portion, so 90,000 times 1/6 for sundry expenses in the office as well. Okay, then number 11, sales amount to 3.6 million. I want you to go to 13.3.2. Now in 13.3.2 you have an income statement. Now it's just an extract of the income statement, so it's a very summarized income statement to what you compared to what you normally know. But we've got sales here, we're going to put it in sales 3,600,000. Okay, 3,600,000. And then it says commission paid to salespersons is 5%. Now commission is regarded as a selling and distribution cost. So go to your selling and distribution cost, open up commission, and your calculation is going to be 3,600,000 times 5%. And then you turn over the page in your textbook, and we've now got some balances. Okay, so we've got the raw material stock account. Okay, it has a closing balance on 28th February of 64,000. So go to note 1, which is the note for direct materials or raw materials. We do have this place for closing stock. We're going to put the amount in brackets 64,000. Okay, and once you've got that, you can work out our answers. We're going to say 1,366,000 minus 64,000. And that will give us 1,302,000, which we can now take to the production cost statement. So I'm going to take this answer to the production cost statement here to direct or raw material costs. Okay, so 1,302,000. Okay, then direct labor costs. There was only this figure of 180,000, which we can also take to the production cost statement. So I'm going to take it in there, 180,000. Now that we've got these two figures here on the production cost statement, we can work out the prime cost. We're just going to add up these two figures within the block to get the answer above the block. Then we can go back to the notes. The next note we need to complete is the factory overhead cost, but let's go and look at what the closing balances are for. Okay, so if you look at the closing balances, the work in progress stock balance hasn't been given to us. There's a question mark there. Now, if you remember from earlier in the question, the work in progress at the beginning of the year we placed here on the production cost statement. Now, the work in progress at the end of the year we're supposed to put in brackets here. Now, because it hasn't been given to us, it means that it will be a balancing figure. Okay, so what does that mean, a balancing figure? So normally you would come here, you would calculate, and this would be our final answer. Now in this question, we're going to have to get this answer another way and then work backwards towards the balancing figure here. Okay, then if you look at the third bullet, the finished goods stock account had a closing balance of 80,000. So I want you to go to the note 6. Okay, now note 6 is the cost of finished goods sold. We put in the opening stock here earlier, and now we're going to put this closing stock. Okay, remember closing stock must always go in brackets, so that is 80,000. Okay, then consumable stores on hand of 6,000 rand. We have a consumable stores on hand, I don't know if you remember, but we put that here as indirect material or consumable stores. And I told you the calculation is opening stock plus purchases minus closing stock and minus returns if there are any. There are no returns in this question, so we don't have to worry about it. Okay, so which is opening stock plus purchases minus closing stock. And the closing stock figure is 6,000. We're just going to subtract it in our calculation and then get the final answer. Okay, now that we've got all of these figures in factory overhead, we can add them up, get the total. And once we have the total, we'll take the total to the production cost statement. Okay, here at manufacturing costs or factory overhead costs. Okay, now to get the total manufacturing costs, okay, we're going to take 1,482,000, which is the direct cost or the prime cost, and we're going to add the manufacturing or factory overhead costs to that. Okay, and that will give us the total manufacturing cost for the year. Okay, so to this answer we add on any work in progress at the beginning of the year. Okay, and the reason we do that is because any goods which were unfinished at the end of last year will now be finished this year and will become part of the cost of production for this year. Okay, we don't have the work in progress at the end of the year, so we can't calculate this figure. Okay, let's see what else we can calculate here. Okay, so the cost of production of finished goods. The final answer comes from note 6. So perhaps if we can get that from note 6, then we can come and place it in here so that we can balance our answer out. Now, if we were given the work in progress at the end of the year, we would have put it here in brackets. We just have 2,485,200 minus the closing work in progress, and that would have given us the cost of production of finished goods. Okay, we don't have that, so we're going to go back to our notes and finish them. Okay, the next thing we have is the selling and distribution costs. We're just going to total it. Okay, 417,000. We'll put it in just now. Okay, and we're going to total up the administration cost as well. Okay, we'll also put it in just now. Okay. Okay, then we come to the cost of finished goods produced during the year. Okay, now I want you guys to make a note here that the opening stock of finished goods, this was given to us in the question, and the closing stock was also given to us in the question. This line here, there's nothing written there, it's just going to be the total of these two figures. Now this one here, which is cost of finished goods produced during the year, this is the final answer from the production cost statement. Okay, so this is the figure that we needed actually from the bottom here in order to complete this. Okay, and so we don't have it yet. So let's see what other information the question has that we can use, right? Okay, so I would like you guys to look back right at the top of the question where it says that Kwamabula manufacturers produces cricket bats that they then sell to various sport retailers at a markup of 50%. Now, this note 6 is actually used to calculate the cost of sales. Now, we've been given the sales in this question. Now, the sales was 3.6 million and the markup is 50%. So you're just going to take 3.6 million, multiply it by 100 and divide by 150 to get the answer here. And once we've got this answer here, we're going to actually work backwards to find this figure here. So I'm going to write here that this is the balancing figure. So you need to be able to manipulate these notes in order to find other figures that you need, right? But remember, the only thing that goes in brackets in these notes is the closing stock. Okay, so normally we would take this figure minus 80,000 to give us 2.4 million. So now I'm going to say 2.4 million plus 80,000 to give us the answer here. So 2,480,000. And then we're going to say 2,480,000 minus 70,000 to give us the cost of finished goods produced during the year. Now, if this figure is 2,410,000 and it's also the final answer from the production cost statement, we can then take it to the production cost statement, put it in here as our answer, and work backwards to finding the work in progress. So all we're going to say is 2,410,000 minus 2,485,200. That will give us 75,200, which is the work in progress at the end of the year, and then that figure wasn't given to us, which is why it's the balancing figure. Okay, so now if you look at the notes, we are complete with all of the notes. Okay, so now all that's left for us to do is finish the income statement. So once you go to the income statement, now in your workbook, this the income statement looks like this. Okay, so we put in 3.6 million for sales. Okay, so you're just going to fill in this other information. So after sales, we need cost of sales or cost of finished goods sold, which we're going to get from note 6. Okay, so 2.4 million from note 6. You can check note 6 there, right? 2.4 million, right? Okay, then obviously, when you say sales minus cost of sales, that will give us gross profit. So you can fill that in and work out the gross profit. So 3.6 million minus 2.4 million. Now the other costs will be the selling and distribution costs and the administration costs. Selling and distribution costs we can get from note 4. Okay, and administration costs we can get from note 5. Please can you go to note 5 to get the administration costs answer 182,500. Okay, now that we've got the selling and distribution costs and the administration costs, you can add the two figures up and put it above in line with other costs but in brackets, just like a normal income statement. And then you're going to take your gross profit minus other costs to work out your net profit. So 600,500. Okay, and so that's all there is for this question. I would like you guys to try 13.2. Please feel free to ask me any questions in the group. Thank you. Bye.